Okay, we are back. We had some technical difficulties. Holy.
Man,
Oh,
it's been a challenge.
it's been a challenge. We were trying to record a session. We had some fire alarms going off. We had internet falling out. We had a whole mess of things. So we are
Yeah.
back though. This is it. I'm super excited. If you guys don't know already, my name is Matt and this is Chris. Today we are going to continue our testing session with Euro
Yes.
USD in Backtest and Chill. So
Yes. Very excited about this one. Like, to be honest, when we started, I was really hyped up. Well, here's our second attempt, guys. Hope you
yep, let's
enjoy it.
go. Let's go. Let's go. Let's dive into the charts quick time. And here we are. This is Euro USD on the weekly. So, yeah, Chris, what are you thinking from the weekly here? What is it looking like to you?
It seems like it's going down. We can see that we took a previous weekly high prior our current week.
Mm-hmm.
And also, if you pay attention, we have like this BPR to the left that has been respected for multiple weeks. Bodies can close above it, so it seems like we're going down. And if you zoom in a little bit,
Just gonna mark out this order block quick time.
yeah, don't worry. And that order block as well, above the BPR to the left for people watching us.
Mm-hmm.
And as you can see, easy target is that weekly low, the first one. And if you pay close attention, you have those two. So that's a lot of sell side liquidity
Yep.
nested for
Absolutely.
price to take it eventually, in my opinion. And last target will be that low that you just marked out. So that's
Yep.
what I'm seeing, dude.
Agreed. Agreed. I think it's yeah, we have a beautiful swing point here after we took out that weekly high. We actually hit that. You see this big wick, this rejection block. If I measure, it almost gets up to that 50% there, and we die off and create a swing point. So now, I mean, you're just looking at downside. You could even look at this rejection block right here. See that wick? You see how we closed through the bottom of that? Very, very likely that this week we just retest that and start hitting down into this low and these lows, and potentially even all the way down into here.
Yeah,
So
I do
that's
agree.
what we're looking at there. Where are we at? What time is it? We're at midnight. So let's just fast forward quick to New York session. And so you can see there, we touch that level and start breaking back down. Very, very likely that we're just going to come back down and take out these lows.
Yeah.
4 hour. Again, same thing, looking at it to come down. It's probably just going to respect that traffic. There's a lot of traffic, no real reason to be popping up, especially because we closed below that 50% of that rejection block. And so you can see we test it and break back down. We're showing signs that, you know, this is really weak. This is really, really weak. And from the lower time frame, we have this purge on liquidity up here. Last sequence of up candles right here. Okay, last sequence of up candles right here. And that is just very clearly going to the downside.
Yeah, I do.
15-minute, purge liquidity right here. Inversion right here. The only reason why I wouldn't take this one currently is because we have this one here. And I'll never take the inversion on one if it is respecting the lower one or the lowest one. That to me is always that's why I would not take that no matter what. So yeah, even though this is nice here, I just wouldn't take that because it's still holding the lowest one. If that were to slide through and then this becomes an order block like that, then that's different, right? Because then that shows you that it's okay, it's sliding through this one and now it's clearly going down like that. So that's what I would be anticipating. So let's go to 8:30. Okay, so that's 8:30 there. You can see right like that. Okay, we're respecting that block. Look at that. We get that close right through that level. So that's again, that's a sign that you could take that, right? Like that is now that we're closing through that last sequence of up candles and in through this level, we could take that, but we're not going to just because we didn't fully close throughout this low. Okay, so we would have to wait for the 15-minute to close. So if we do that, well, the 15-minute did close and it closed within it. So we would have to wait for the next 15-minute to close through it. And if I go next 15, yeah, it just went straight down.
Yeah.
So, but you could see there, look at that. Look at the top of that candle, the high of that candle, literally perfectly right on to that 15-minute block right here. Okay.
Yep.
So 15-minute block, it's consolidating. We close through it, retest the bodies. That's where the major injection comes in. So yeah, but that's super clear. It looked like it was going to go yeah, direction was clear there. The only thing is for entry, I would have to wait for that, and that's just part of the having rules, right? So
yeah.
Let's go now to well, we took out that low, we don't need that anymore. We have these equal lows, so very, very clear that it's going to come back down into those equal lows. We look on the hourly, we have this order block really from this low and up. I would personally prefer to see it get to the bodies, because the bodies are where the where it typically does have to get up to.
Volume is resting.
Yeah, exactly. Let's mark off the 50% of it though, just in case it wants to come back up into there.
Yeah.
15-minute, 5-minute. Where was the last sweep on liquidity? It was right here. So that to me, you're looking at, look at that, 50% comes right back up into that rejection block / order block there. Let's see. There you go. You see that? Look at that, 50%. That is that 50% of that rejection block. So again, if you're looking for longs, that's where a lot of people are going to be looking for longs right there, right? And so in order to mitigate out of the long positions, they come right back up into it, allow for that to happen, and then now continuation back down. And there we go. Okay.
Just super clean.
It's just super, super, super clean. But again, for me, this one right here is not one that I would take, because again, that's low of the day. We're at low of the day. Yeah, sure, we are trending down, but I don't really like to be shorting at low of the day, even if it's just a subtle retracement. What I would prefer to see in instances like this is something like that, where we hit low of the day, so right here, pre-New York, and we come back up. And what does it do? It starts to take out buy side liquidity, and then that fuels the rest of the downside, right? That's what I like to see on an intraday perspective, not it take out a low and then, oh, here's the fair value gap within that lower low and anticipating a lower high, because from what I've seen, a lot of times it comes back up, takes that out first before it goes.
Yeah.
So anyways, that's it for the day here. This is London close now, so nothing too crazy. We have those equal lows down here that we're likely to be looking at, right?
Yeah.
Yeah. Let's look at the daily again.
It is something that, in my opinion, is very clear, but I would not take at this time.
Yeah, we have moved. We've moved down majority. Like you look at the last expansion days, we've already fulfilled the range for shorts, right? And yeah, we've already fulfilled the range for shorts, so it's not a good thing to look into. So let's just go into the next day.
Yes.
There we go. See, so now that we take out this liquidity, we have potentially created a range, right? We've potentially created this range now on the daily after taking out major liquidity over here.
And before you continue, G, as you're saying, we took that sell side liquidity, which was massive and clean to the left, but also, what are we testing after it? Can you measure the body of the order block prior to those
this one here?
Couple of lows?
Literally right at the 50% of that.
Exactly. It's just extremely clean.
Yeah, right at the 50% of that. We have equal lows here. We're purging back in. We have, remember what we were talking about in the last one too, is we were talking about internal liquidity, then into external liquidity, then back into internal liquidity, then back into external liquidity, right? Like that's the flow. And so you look at this right here, we have internal liquidity, external liquidity. We just cleared this external liquidity. So what's the next likely scenario? Well, to fade back in, regardless, even if this low is down here, and even if this goes down and runs this low first, the next move, it's either going to be from here or it's going to be from here, right? That the
Guys,
retracement is going
this
to come
is
from.
so gold
Yeah,
that you should just rewatch this piece again and again and again.
Agreed. It's a huge key, and like it's something you overlook in intraday trading, because
you just focus on the entire things, like the entire thing, or the other factors, but you always, or a lot of people most of the time, forget the step process where these other variables lined up. And this is how they lined up. For me, it was really challenging to articulate.
No, it's all good, and it's true though, because the thing is that there's a sequence, and I think the sequence is the most important, and it's not just about entry models, and it's not just about this, it's not just about that, it's about a sequence. If like you look at the higher time frame, and the higher time frame is at external liquidity, that means higher time frame, my next move is coming back into internal liquidity. And so if that my higher time frame is in external coming back to internal, then I should be looking for buys, right, up to key levels, up to 50%, so right up to here.
I see it this way. Even though you have a clear draw, you need something to sponsor your move,
Absolutely. And that's why this up here was so nice, because the draw was clearly bearish, and then look what happens. You go external, it comes back up into what? Internal. It takes out liquidity up here, but it's still in 50% of this order block that's being respected. Like, this is just classic. So the next level is external liquidity. So you're trying to short this whole way down, which we were, but there wasn't really much in New York this whole way down. So it is what it is, right? But that's the key. And so now it's the opposite. We take out external liquidity. We're at 50% of this order block. So the next move is likely to be up, right? That's just the flow. So yeah, great point on that one, Chris, with the order block there and everything. Let's go then to the 4 hour. And so if we're looking for upside, then this is very likely going to be our inversion right on the 4 hour. And so that's the next series in the flow. Now, you don't necessarily have to use 4 hour. Like when I'm day trading, I'll use it as a reference, but really I make my decisions off of my daily, my 1 hour, and my 5 minute. Those are my decisional timeframes. 4 hour is just more like, is there anything there that I'm missing and stuff like that, just to clear things up. I really, really like to use 3 timeframes as my decision-making criteria. And so you can see here, daily, my bias is up. And now what do we see here? We see a purge on liquidity, taking out of this low, and we get this close through it. We have a close through this 1 hour level as well, right? This inversion, it's supported, breaks back up. And so this is the sequence of events. We have our consolidation. If I'm looking for longs, there's a couple opportunities. There's one, the turtle soup entry, which is entering at the low when that hits a point of interest, right? A higher time frame point of interest. That's entry opportunity number one. Then there's going to be your inversion entry, meaning it closes back above that inversion. You can enter off of the inversion right there. Okay. Number 3 is going to be the breaker entry. So it closes back above, you get your breaker, and then you go. And then later on, there's going to be one that manipulates the breaker. That's going to be your inducement entry. And then that's going to be the real one that blasts up. The breaker, you can get a good 2-3R out of that pretty consistently, but you have to be careful because this one is typically the one that happens. So there's going to be 1, 2, 3, and 4 different entry typically on a setup. Right? Does that make sense?
Yeah.
And so
golden.
Awesome. So if that makes sense, right? So look at, we hit that higher time frame PD array right here, right? So we purge this. So that's your turtle soup. You have your second entry right here, which is your inversion. Now you have your breaker, right? And then what's likely to happen is this come back down like that. And then this is going to be the real one, right? But this breaker could be good to take up to there, right? Like that. And that's could be enough of a trade to take a decent win, right? So if we just mark off this breaker, and it's going to be the highest up close candle, so this one right here, and we'll keep that gray because this is our hourly time frame, and that's how I denote it. I usually have the blue is the daily, gray is the weekly, and then green is the intraday. So I know that all I have to do is mesh, gray with green, and like, I'm in the right direction. That's typically how I kind of do it. So say for example, I use the 1 hour right here. This is your breaker, and here we can even go down to the 15 minute if it's clearer. Well, then what do you have here on the 15 minute and 5 minute? Well, first off, you have a fair value gap right here, right? But I'm going to wait until 8:30. Okay.
Yep.
8:15, 8:20, 8:30. Okay, so 8:30. So we have this fair value gap here. We have liquidity resting right here. We have our breaker right here. And if you refer to the higher time frame as well, the 15, you actually have another order block right here.
Yes, sir.
Right? So this, to me, there's a lot of confluence that tells us, hey, at least we could be getting up to here. Do I have enough area to manage my position if price gets up to that level? And so if we see it, so say for example, we're looking for a turtle soup entry, meaning taking out into a higher time frame point of interest. So right here, we put our stops below this low. Do I have enough to manage my position here? Yeah. I have a 1.2R before I can manage my position. And then who knows, right? Maybe we can get maybe this absolutely explodes up. We don't know. But that's, as long as we can be managed by this position, we should be good to go.
Yeah.
So,
and for people trying to learn, if you look to the left carefully, there are clearly a couple of points where you should be taking partials. And in this example is a New York high, if I'm not wrong, previous New York high, right?
Yeah, this one here is the London close, and then there's the New York high up here.
Exactly, that one.
Yeah.
Okay, so both.
Yeah, absolutely. And you have your previous daily high up here. You have your previous daily low that we purged. So we purged daily low. We changed state. This is very clearly going to the upside. So we could even, like Chris said, target that 2R to get up to that level. Take partials at this one right there.
What I'm saying is that there is liquidity. And if we are following what you said before about the flow, those are the logical ones, in my opinion.
Absolutely. And again, remember the higher time frame says that, well, we're probably getting back up into the 50%. Like, so there's room, right? We have a lot of room, but we're playing the breaker right here. So we have to be careful, because the breaker will probably just go like something like this, where we hit the breaker play, right? Hit that liquidity and maybe get something like that. Then that's going to be the major buy, right? It's going to induce. So again, we have 8:30. I'm expecting price to I would like to see it come back down and take at that low into this level. It might not even get back down into our entry here, to be honest. But because we have our breaker here, so we can put it at the front of the breaker. But to be honest, let's just put it right here, right at that order block there, with our stop below that low. So we get a nice 2.5R.
I'm happy with 2.5.
Yeah, exactly. I am as well. And you can see on the, the thing is, I was going to say, it's this fair value gap. I have a feeling it's going to wick down into this fair value gap, and that's it. But let's see.
Let's see.
Equal highs. Yeah, it's just going straight up like that. So it immediately comes and takes out that high. And so that, to me, is just off the table.
Yep.
Okay. So basically, we actually didn't even use this breaker yet. So this will probably be induced. Okay. This will probably be induced. But now that we're up at that 1 hour level, we have to be, or that's not what I meant to do. We have to be cognizant of the fact that, we're at a 1 hour level. We have, some traffic here. So we're likely going to get some sort of retracement back down into this level, right?
Yep.
Look at that. That down candle, fair value gap right here. So let's see. And again, we have our inversion here. So it's very, very, very likely, okay, that if this closes, so there you go, the 15-minute close right there. We close through that inversion. This is going to be what's going to bring us back down into this low, right?
Yep.
But again, we are bullish. Let's see. Let's see where we're at here. Yeah, you see that the OTE is literally lining up right with that. Again, we're more bullish on the higher time frame. So this is a short here, right? This is a short. We took out major liquidity, came back up into here, but the range is 7 pips, 8 pips, right?
Yeah.
We'd much rather be going long right here at this breaker, plus that order block. So I would say, I'd say you wait for the longs here, as opposed to the shorts in this case.
Yeah. For people watching us, we're just reading price. Even though we see opportunities, it might be better not to take them all.
Agreed. Agreed. So again, if this is going to go, what day is this? So this was Monday as well, right? So look at how Monday opened.
Yes.
Monday opened up here. We immediately go back down. We purge that major liquidity pool. We just shift on the 1 hour. This is potential open, and this is all the wick of the weekly candle, right? And again, that makes sense because look at where our target is.
Yeah.
Right? Our target is potentially to that upside there. So it's something potentially worth taking to go long from here, and even just targeting up at the previous day's highs could be good, right? For Tuesday low of the week. So let's see. We have 10 a.m. If this gets triggered by 10 a.m., I'd be down to take it. Let's check it out. Okay, so right off of that level, again, 10 a.m., falling. Just selfish. So it actually just used the breaker. You see the breaker right there? Okay, so let's just take that off. It used the breaker. It didn't get down to that order block. It used the breaker right here.
Let me just interrupt you for a sec.
Yep.
Kick rocks, man.
Oh, kick rocks.
My apologies, people. I just got emotional.
Yeah, so exactly. It comes back down into the breaker, and then we get that extension off. So there's the trade right there. And now that we've filled up that 1 hour fair value gap, it's over for today. But there was a lot of things that aligned with that. And yep, just is what it is. But good read.
Good read.
Let's clear all this off, and let's go into the next day, New York session. So yeah, again, remember I marked out yesterday's highs. Look at that.
Yeah.
Right? Previous day highs. You see how it just accumulates at that high, grabs all this collection of orders, right? And now we sweep up. So this is actually the previous day, and then you have, because this is at midnight, if you actually look at the actual session breaks, you'll notice that this was the actual previous day high on the daily candle. So we actually did purge that. Okay, and now we broke back down, we changed state, and so this is looking just incredibly bearish. So likely just going to support that and back down. I would say at least back down into this inversion, right? Because remember, like I said before, where we have that sweep, we have the initial inversion entry, that's it. Breaker entry, that was this one. And then there's potentially one more at the sweep. So we'll see how that happens. There's the other option as well, that the low goes and gets targeted, right? We just took out major liquidity here. We accumulate above that. This looks very, very heavy right now. So this could just tap and go all the way back down and to take out this low.
Yeah. Because if you guys can remember, we have a target down there. Exactly.
And we hit highs. So as soon as you take out buy side liquidity, it can go. It doesn't necessarily have to climb all the way back up into this fair value gap. I would like that, right? Yeah. I would like it so that we get a nice swing point here on the daily that confirms that we have a swing, and then we could start looking at that upside, right? That's something I would definitely prefer, but it doesn't have to, right? We could just take out liquidity, come back down and go lower. So
yeah.
Yeah, let's go on to the 1 hour. You can see beautiful order block right here.
Yep.
Beautiful order block right here.
I really like that.
Yeah, likewise. The hourly looks so clean. You have that order block like that, right? That took out a daily high, close back below, fair value gap here, respect, break back down, likely going to touch back up into that, use it as the opposite side, right? The fair value gap on the opposite side, use that as kind of extra fuel to add into the short. And so I would expect that and at least get down to this swing point here, right? Because again, if this is going to be going long, it's going to induce this a low first inside of that order block, and then it'll go up. So that would be the main target, and then anything down beyond that would be kind of extra.
Yep. For people that haven't accumulated a lot of experience, these are the type of price actions where you're like, oh, it's super clean and easy.
Mm-hmm.
Those are the ones you're looking, or your favorite ones. If you're not, like, you see, it just melt.
Yeah, it just melts right at 8:30, right at the news, which is consumer price index, so CPI. Very, very clear directionally. Yeah, these are the days that you kind of you want to wait for, like the ones that are like, okay, even if you don't get an entry, at least it's like, yeah, I know that price is likely to do X, Y, and Z. Like it's more probable that this happens, you know. And so yeah, it's definitely, I love those types of days,
and super reinforcing with your confidence, to be honest.
Definitely.
It makes you feel like a wizard, people.
Yeah, absolutely, it really does, honestly. But yeah, so again, same thing that's going on here. We have this fair value gap here. I wouldn't take this again because it's low of the day, even though I'm anticipating that this low to get taken. That's just a part of my rule set personally. I just don't take low of the day trades anymore, not low of the day shorts. So
yeah, and if you see, it's 9 a.m. and look how much it has moved.
Yeah, like exactly. Yeah, we've moved a pretty decent amount. Very, very likely to take out this low, but again, just not enough for me to take. But there you go. So respected nicely, went back down, inefficient run into this low. Now you have to be careful, because why? Well, you're coming into a down candle, you purge liquidity. There's also a where are we at right here? There's that portion of the order block right there. Let's look at the 4 hour quick. Yeah, I was going to say there's got to be something else. So this order block right here. Now, the way that this looks right here, you see this inefficient up, inefficient back down. We slid right through this on the 4 hour. This is more bearish. Like this is very much more likely to hit the lows just by how this looks. Whenever you see something like this, inefficient up, inefficient down, we slide through that inefficiency, right? This one gave a little bit more of a reaction, but whenever you see that inefficient down, inefficient up, we slide through it and continue going. Like it just always happens that way. So whenever you see like that, good luck. We're targeting the lows. So I'm more inclined for the lows to get targeted. I wouldn't be looking at the buys here personally. So not until that low is targeted, right? Because that's a daily low. And again, we're at the 50% of that order block. So this could just be turtle soup low of the higher time frame level. Remember, it's just like this: consolidation, sweep, and then it gives you your 3 entries right here too. This could be the consolidation, sweep, turtle soup low, and then there's the inversion, and then there's everything else, right? The breaker and so on and so forth to get up to that level. So just looks like it could be a fractal, if anything. But yeah, let's just see here. Looking much more bearish, in my opinion. I mean, look at that. Those are very, very, very strong. So
and he's moving very inefficiently.
Yeah, so. And respecting, right? So inefficiently and respecting. That's, typically a good sign that it's gonna continue down.
Super late in the day.
Yeah, but it's all good here. So this one is all right? We take out that low, and then what does it do? It comes right back up. And this is what I'm saying. I don't short at low of the day, because you might have easily said to yourself, well, this one worked. Well, what about this one? Now this one's at low of the day, and look what happens, right? We react, cut right through it to do what? To take out a high. Like this is why I'm always cognizant of that. I always want to see a short at a high, not at a continuation low. That's just from what I've noticed. It doesn't work for me. So okay, so there you go. Your last up candles are right there. We just get that close through, right? Last sequence of up candles, purge liquidity, close through. That would be a much better short if you're going to take that one. For London close, there you go. See, so London close, little range there.
Yeah.
So let us go up to the 15-minute and let's skip to the next day. New York. Yeah, so that's exactly how it ended up playing out, right? How it came back up, swept that high, broke back down from here, takes it out this low. And now we have to be cognizant of the fact that, hey, there are equal lows here. So I'm not biased for this to be up as of yet, right? This to me still looks bearish. Sweep, break back down, fair value gap, right? If I go to the 1 hour, it'll probably be much clearer.
Yeah.
Right? Yeah, look at that. So there's the fair value gap there that's being respected on the hourly. So we use our gray. We have our order block right here, which was respected.
Yeah. And to the left, you have the same.
Yeah, exactly. And so on the 4 hour, again, this is what I'm saying. I use it as Confluence. Remember what I said here, that how when we slid through it here, but then we slid right back through that. It's the same thing here. It's the same thing here, and we can see that we slid through that, and then we also have it right here as well. So this is respecting clearly down. Nothing else to look at.
There's not much to say. Just
not much to say.
Full margin, dude.
That's what I would be looking at personally.
Yes.
For that, but let's see. Let's wait till 8:30. Again, there's going to be, what news is it? Retail sales. It's actually holding this pretty nicely, but let's see. Yeah, okay.
Oh.
So we got a really inefficient move, so that actually did not hold, which is fine. Let's go back up to our hourly. Where's our 4 hour again?
Oof. Look at that level, G.
Yeah. Yeah, it looks like it could be doing what we initially said, where it like turtle soup that low. Yeah, I really didn't like the equal lows there, but let's just take all this off for a sec.
Yeah.
I really didn't like those equal lows, but I guess because we already purged that liquidity, that it could be okay. Is there anywhere that we're looking up into? Well, let's take an eye. Let's keep an eye out for this 4 hour. Right. Again, we slid through it on either side. That's our what's it called? BPR.
BPR.
So yeah, let's see. Very, very inefficient move. Okay, very inefficient move. We purge the high of the day. We come back up into yesterday's London close. We have a very, very clean leg, right? This is good to take down, in my opinion. This is what I would like to see coming back down into here. So we can wait for that 5 minute if we wanted to, but here's the 1 minute. There we go. Turtle soup. So remember our entry. This could be an entry right above here, right? Because you're in a higher time frame point of interest. You just have to put your stop up to where the higher time frame point of interest would be invalidated. Sorry, right? And then the next one is what?
Efijanskis.
Yeah. The next one is inversion. So right here, the fact that we closed through that on an inversion, that's entry 2. Right?
Sorry, I just realized that you might said that for me to ask, and I just stunned out, dude, in the price action.
Oh yeah.
I just was like, okay, keep going, price.
So yeah, that's gonna be that there, and then we have the breaker, which is right here.
Yeah.
Right. So the fact that we already slid through that FEG is a really good sign. But to me, whenever the breaker is this close and stuff like that, I usually wait for some extra
confirmation.
Yeah, some extra signs, or wait for some closures. So let's go to the 5 minute. There we go. See, so now that we came back down and we took out, or we made these equal lows here, it looks really nice because now we slid through this breaker. We have a fair value gap within that breaker.
I will be taking it literally from there, Maggie.
Yeah, I would take it from here. Thing is that it's 5 minutes until the start of the new hour. So what we should do, actually, the best scenario I think would be wait for the 9 a.m. and then we enter at the open of 9 or above the open of 9, right, to catch that hourly candle. So say, for example, we're going for from 9 a.m. to 10 a.m. and if this is going to be a bearish candle, it's likely going to open, swing back up, cut back down, right? So I think we should wait for the open of that candle. Let's see.
Whatever you say, master.
So there we go. We open. Okay. There's our open of the hourly candle. Let's mark it like that. Again, this is our framework that we are going to be shorting. Okay. We're going to be shorting. We have a inducement potential high right here. You can wait for respect if you want. Like if you want to just take it right from there, that's a completely valid play right where it is right now, stop above this high. Or you could wait for some sort of confirmation to say, hey, we're going to actually close back down below that open of that hourly. So I'll do that just for extra confirmation. And a good way to do it is just, you see this line that got swept here, you want to see it come right back down below that, and there you go.
Poof.
Okay, so hits that level, we break back down, we actually shift and change state again on this time frame, right? Last sequence of up candles, there's your order block.
Yeah.
Right? So there you go. So you could have entered at the open of that hour because this is likely going to be the wick of that hourly candle, right? But we can just enter directly from here. We can put our stop, let's say 10 pips. Shouldn't get back above there anyways, right?
No.
And then what we can do is we can target traffic, or we can just target 2R, just straight up. Because this is all traffic here.
Yeah, it's all traffic, but it could be moved that can melt. Who knows?
Yeah, it's true because
taking off of the table a lot.
Yeah, totally. Because you're right. Because we also have these equal lows here. Remember? So let's leave a runner. But by the time it gets down into this traffic right here, right, 50% of this whole traffic. So this whole consolidation, right? There's going to be a couple things that might happen. We might have a consolidation and continuation cycle that goes like this, right? Or we might have the reversal cycle, which does consolidation, manipulation, and then the distribution and retest it on the other side, right? But we have to be cognizant at this traffic because this is where a lot of orders have been accumulated. And so at the top, which is at midnight open, and then at the middle, which is at 8:30 a.m. open, those are going to be very, very delicate levels, right? So good to keep in mind. And so let's just take this here. 1% risk. I'm really, really confident in this one here. I would be looking at, taking out, I would say at least 75% by the time we get down into here. Like no point in being greedy. That's 3R. No. I mean, that in itself is a full trade. Like, you know what I mean?
And not only that, like you also have to take into account what time it is.
Mm-hmm.
And
9.
If you're just running late for it to hold it, you better not, just take something out and pay yourself.
How about this? We'll see where we're at by London close. If we're down here at London close, then that's a good sign that it's probably not going to continue down into the other liquidity pools, right? It'll likely come back down in here by London close, and that means it's done. Now, if it just rips down and completely consumes this clean leg, then that's different, right? But anyways, let's see. I'd be confident, or wouldn't be surprised if we come back up and test that order block first. Let's see. Fair value gap. We're just breaking back down. Let's see. Let's see. So it's consolidating, coming back up into that high. Okay, now this is it. Look at last up that took out that high. So the induced got induced. The inducement got induced. That's it. This is just classic, dude.
Almost getting induced, my man.
Everyone's getting induced. That's hilarious. Yeah, so that's I would have expected that this would have held, but that's why I don't put my stop directly above that. Like always put it above, like at least in this case, it's above the sweep, so it really shouldn't get up. If it gets up into there, it's probably going to fail, right? But the fact is that now we swept this and we have another order block right here, right? And so ultimately, the fact is that we swept that, we broke back down, we have fair value gap here. This is actually an order block, in breaker block right here, sorry. Okay, the down candle, we created a high, we created a low, we have that fair value gap. So now that we have a really solid entry model right here, your stop can definitely be moved down, specifically because of the time. And also another entry could be scaled in if you wanted to do that. But yeah, let's see. There we go. See, so it holds that breaker. Okay, and we start, let's see if we can come back down now.
Baby, okay, what are you doing?
Yeah, it's going to probably start off on this next hour here. Here, let's just mark off this instead because we kind of broke through that breaker, but we are kind of still respecting this level here. So again, it's probably going to start off again, open, come back up, and because in the new hour, I'm actually going to move my stop back to where it was, just because I'm not confident in the fact that this might pop up, take out this high, and then come back down. Let's see.
Oh, good.
Yeah, so it's just gonna open and rock it down. So as soon as we take out this low, we can be managed.
Guys, this is the thing you have to endure if you're going live. Imagine just 1 hour of waiting, staring at the chart.
1 hour of drawdown.
Like, oh man.
1 hour of drawdown where it just goes up and you're like, oh god, it's gonna take me out. Oh, it breaks back down. Oh no, now it's consolidating. Like you have to be so
emotional roller coaster.
Yeah, it's an emotional roller coaster. And that's why, like, a lot of the times I like to just enter and kind of just leave, you know, like I just want to just not look at it, do other things, like check in a little bit, set my alerts, but like not be fixated, like staring at every tick of every candle. Like that's when you can drive yourself insane, in my opinion.
Who doesn't?
Yeah, I know, but it's so hard. It's so hard not to do that, you know.
Like, who doesn't get completely obsessed by seeing the candles ticking?
Exactly, man. Exactly.
If you look at it objectively, it's just
it's just silly, like
brutal.
Yeah, because like at the end of the day, it's either going to win or it's going to lose. Like nothing that you do in the middle is going to control that outcome. It's just going to it's going to be what it is, right?
Yeah.
So anyways, let's see what the 5 minute does here. You can see that we have a breaker block. So same thing, breaker, fair value gap. It's probably going to test
FPG right there.
Yep. FVG, breaker, clean leg. Yeah, this is coming down. Again, remember, at this traffic, we want to be partialing out. So again, here's your order block. Whenever you have an order block with a big wick like that, it's good to just measure the wick out, and you can see the 50% lines up right there. There we go. Okay, so perfect. We get that launched right back down into that level. This is where I would be taking off. Like in real life, especially 10:30, we're going to be coming into 11. By 11, wherever it is, I would just close it straight up, whether it be here or whether it be down here or whether it be all the way back up here. Because at 11 is when the cycle is essentially complete, in Forex at least. It's for me, I really don't like to trade deep into the day because it just dies, and then you're stuck into stuff more that's consolidative. And when that happens, your mind is you just sit there and you're just sitting in consolidation. You're like, oh my god, dude, I've had enough of this. Yeah. So anyways, we can move our stop down to break even here, just below, actually above that breaker. And honestly, because we had this support of this order block, you really could start trailing your stop down into here if you are
really late.
Yeah, and it's really late in the day. So what I would do is I'm going to take off. Let's go.
I could take 75.
Yeah, you want to go? Okay, let's go 75.
Yeah,
let's go 75, and let's go in the 1 minute, and let's just monitor here because again, this is going to be a key level, right? This was the data point comes out, boom. This is where the liquidity is. It's literally showing you they injected at this time, and it went directly up. There was a large order that was placed there, right there at 8:30. So
what makes the market move like that?
Liquidity,
my peep. That's money right there.
Yep, that's it. And so this is the point where you have to be very, very cognizant um, of injections coming back in, right? Because that's where the initial injection was. There's residual orders that are resting here. So they'll probably have to accumulate. And even if it just goes up like this, right? It just goes up and falls back down. It doesn't matter. It's still, it's just about the process. And that's where I would get off, take out some more. Okay, so there we go. Breaking back down.
What time is it?
What time is it? It's the end of the hour. So again, look at the hour. Okay, the hour opens, creates the wick. We get the expansion for the hour. Like if we close the position right here, we've caught that whole hourly candle. Like that's the idea, right? We thought that it was going to happen this one, but instead it got delayed. It delayed another hour, so we had that, and then we ripped. So again, we played it and we did it well. So I would say right now we close off 75%. So let's just wait. I would say if it closes back above this high.
Yeah, I don't want to lose that money.
Yeah,
I just want to earn more. So
exactly. Yeah, it's just going straight up there. So new hour.
Right there.
Right, look at that. See, so we inverted. If it's going to go up, it's going to go up right from here, right?
Yeah.
There we go. There it is. So again, great idea here and beautiful clean leg. Swept major liquidity, current daily highs, previous daily session highs, right? And then we get that change in state here. We actually entered off of the 1 minute there, but you can see on the 5 minute, we close back below here, comes back up. That's the inducement. And we are supporting that 50%, right? Look at that. 50% of this order block here. Reject and respect. And then we get that launch directly at the start of the hour. And that's why we usually like to wait for those hours, right? We usually like to wait at the start of the hour. That tells us, that's when we're most likely to get that injection. And so, yeah, that was it there.
That was
good trade.
Yeah.
Let's go to the next day.
We have time, for another.
Yeah. How much do we have?
Yeah, we have like 13 minutes. We can smash another day.
Sweet.
Of analysis.
Yeah, let's do another day. Let's go to. Did I just move forward?
Not sure. I think you did.
Yeah, I did. Okay, so yeah, this is where so it went all the way back up. But yeah, there was our short. And so again, it's looking short again, right?
Yeah.
We had this invalidation, right? This gap right here. I'll just mark that out quick time. That gap got invalidated, slid right through. We have our order block here, and we also took out the previous hourly high.
Today is Friday, right?
Yes, this is Friday. So very, very likely that we're going to come back down and create the low of the week, in my opinion.
Yeah. We tested an entire week, right?
I think so, yeah. I think Monday. Yep.
Awesome.
Yeah, we did.
Awesome.
And we only got the one trade, which was this one here, which is better than the last one.
Reality.
Yeah, this is reality. One trade in a week. So yeah, this again, like this is gorgeous. So again, remember how we had that inversion? We purged that liquidity on the hourly candle and we came up into an order block. Well, look at this right here. This last down candle, okay, on the lower time frame. So remember what I said about layering it up between the hourly and then your entry time frames? Oh, I keep clicking the wrong one. I usually layer the gray box with a green box, which means that I have an hourly level mixed with a intraday time frame level or a 5 minute level. And so when I have these two types of things plus everything is lined up, like I love that. That's when I like to enter. And so right here we have a breaker and we have a fair value gap right here. So we have fair value gap, breaker, sweep of hourly liquidity, time is all good. Plus we had major higher time frame point of interest right there. So this would have been a really, really good entry at 740, right? Somewhere around there, 740. But yeah, just where we're at right now is just not there. So
yeah, I wanted to ask, like, what was that horizontal line? And
which one?
Yeah, the one that is at 671 price.
This one here?
No, the lower one. Yeah.
Oh, this one.
No.
Oh, 671. Yeah, that was the major liquidity down here, the weekly.
I just got lost a little bit.
Yeah, all good. So that was this one right here.
Yep.
Major liquidity. So again, we're still down at that level. We still purged all that level. You can see that daily order block right there, held 50%, likely to come take out this low. Then we'll have to see how it closes, right? I mean, we closed back below the 50%, but it closed and then immediately went right back up. So it's hard to tell. You have to wait for the daily to kind of confirm if that's actually still going to hold or not.
Just to point out something, can you go back?
Yes, sir.
Okay. Look where it reacted and what we ended up respecting to the left, like far in the left. You can see it is very clear. Above our order block, the one that we tested with the 50%.
This one right here?
To the left, like back in time. The gap.
Oh, yeah, back here. Yep, good call. Yeah, that inefficiency, that true inefficiency in price.
Yeah.
Right there.
So for people that are learning, those are very important levels, and you can see its reaction.
Mm-hmm.
It just held it.
Yeah, you can see that those are really the true support and resistances.
Yep.
These gaps and stuff like that. It's just really nice to mark them out, and so you can see, and you can see how well this order block here, right? It got broken down through. Look at how well the 50% is used on the other side. Order block here, 50% respected. So I mean, it's just gorgeous, man. When you see this happening repeatedly, it's like holy,
over and over.
It's just incredible. But yeah, that's what I'd be looking at, and it's probably just going to continue down. Let's see, 8:15, 8:20, 8:25.
Melted. It didn't have enough time. It was Friday, people.
Yeah,
and
Friday.
Look how it expanded.
Exactly. But Friday. So remember, Friday, you're looking at a retracement of 30%, right? 20 to 30%. So let me just delete everything here quickly, because that's the TGIF, right? That's the ICT TGIF. So what you're likely to see is a retracement of, let me just put this in here, of minimum 20%, we'll say. Okay. So if I go back to my 5-minute chart, that we are very likely, now that we've run major liquidity, we're very likely to get a retracement back up into that level, right? Back up into that 20%. That's all. That's all that is. Again, you have to wait for your setup. Like, you can't just long it just because you feel like longing it. But again,
especially because you have that low, the main one.
Exactly. Yeah, the main one back down here, wherever it is.
We deleted it.
Oh yeah, that's why. So there it is, right back up into that 20%.
Yeah.
And that would be essentially it for the week for me.
The week. And for me, for sure.
That my liquidity draw has been hit, so there's nothing else that I would be wanting to do. Here's your inversion. So if you were looking for some sort of long, you'd be looking for something like that to take back up.
And bye-bye.
Didn't even get it. So yeah, that's it. I feel like that was a good session. It was at least we got one trade. We got a full analysis there. Let's just fast forward again to the next day open. So this was how the actual week ended up closing. And so yeah, there was an entry there at 10 a.m. right?
Yeah.
For the longs, right at that purge. There's your fair value gap and take it long.
Last down candle, FBG.
Exactly. So there was an opportunity here for sure. If we let's go investigate it on the lower time.
To the left, it seems like low resistance liquidity.
For sure, this is all low resistance liquidity. All low resistance right from here. Literally this whole thing, from this high all the way down. You see all this trend line. That is a bunch of liquidity. So this could have been taken, absolutely. Again, for me, it's fine though, because we did everything that we needed to do for the week. We took that short there, and on a Friday 10:30, it definitely could have taken it, but it's all good. Is what it is. Especially right here, as soon as you hit that level, and then what do you get right here? 5-minute inverted on this side. That's a telltale sign, right? Where okay, if it's going to continue down, it should respect that. It closes back above, comes back in, retest that, closes back above, fair value gap. We have more traffic right here. Right, fair value gap right here. So this was a potential entry, and this actually to take it back up, at least up into this high. So yeah, but that's it. I'm completely fine with that. That was a good little week, Chris Aroni.
No, I'm pretty happy. I just have to apologize because I made a lot of weird noises with my nose and mouth.
No,
I'm a
no, not
little
at
sick,
all.
and nothing, dude. I really enjoyed it this session.
Yeah, no, it's all good. You couldn't hear anything, so don't even worry about it. But
And now
yeah,
you're
we're
like,
we're we're struggling. The boys are struggling here, man, with the sicknesses, and I think we've been sick for, oh God, I don't even know how long. But yeah,
yeah,
it's been a while. Hopefully, feel better and do some more of these sessions, man. I
yes,
think today was really good after the technical difficulties, but yeah, we're back. We're back, baby.
I'm back.
Yes, sir. Awesome.
Thank you
Well,
very
thank you
much.
guys. Yeah. Yeah. Thank you guys so much. Chris, I don't know if you want to say anything else.
No, no, I wanted just to thank you. I
Okay.
wanted to
Awesome.
thank you for sharing the time and even doing this, which we've done before together live. I just enjoyed it a lot and learned a lot. So I hope you all guys that are watching us uh, get the same benefit as I do.
Likewise. Awesome, man. I appreciate that. And yeah, dude, this is such a pleasure. Highlight of my day to be able to come and do this with you. So
Same,
love
same.
you, brother.
Love
Appreciate
you,
you and
my man.
appreciate everyone else here for watching. We'll catch you guys in the next. Cheers.
See ya.